real estate has long been hailed as one of the best investments. However, as we approach 2025, with shifting markets, rising interest rates, and the growing presence of cryptocurrencies and AI-driven investment portfolios, it's important to ask whether real estate still holds its place as a top investment. Let's dive into the reasons why real estate may still be a smart choice for investors and examine some challenges to consider as you plan for the future. But before starting the video, be sure to smash the like button and subscribe so you never miss out on our upcoming videos. Stability. A timeless asset. Real estate's long-standing reputation as a reliable investment stems largely from its stability. In contrast to the stock market's volatility, real estate tends to appreciate over time, especially in desirable areas. Even in uncertain economic climates, people will always need places to live, work, and shop, which means demand for real estate remains consistent. Historically, property values have shown resilience during periods of market turbulence, which continues to make it an attractive option for long-term growth. In cities or locations with limited housing supply, for example, prices may rise even during economic downturns, ensuring that real estate investors see value appreciation over time. Investors looking for consistent returns will find this stability appealing. While some markets may experience temporary slowdowns, the long-term trend favors appreciation. In 2025, the real estate market remains a safe haven for individuals seeking security and predictability in an often unpredictable world. Passive income potential. One of the primary draws of real estate investing is the ability to generate passive income. Owning rental properties offers the opportunity for consistent cash flow each month. For investors looking for steady income, this can be a huge benefit, especially in 2025 when the economy may fluctuate. Rental income provides a level of financial stability that stocks or bonds cannot. Residential rental properties offer regular cash inflows, and even commercial properties can produce rental income from businesses occupying the space. In particular, short-term rentals on platforms like Airbnb continue to be highly profitable, especially in tourist-heavy locations or desirable urban areas. With people traveling more frequently, short-term rentals can provide higher returns compared to traditional rental properties. However, it's important to remember that property management, whether for long-term or short-term rentals, requires time, effort, and possibly a property manager, all of which can reduce overall profit margins. A hedge against inflation. As inflation continues to rise in 2025, real estate remains one of the strongest hedges against the devaluation of money. Historically, as the value of the dollar decreases, property values tend to rise. This is particularly evident in areas where demand outpaces supply. As consumer prices increase, so do rents and home prices, meaning real estate owners typically see their wealth grow even during periods of inflation. This unique characteristic of real estate makes it an attractive option for individuals looking to preserve their wealth. In contrast, assets like cash or bonds may lose value during inflationary periods, but real estate tends to thrive. The predictable nature of rent increases, and property appreciation ensures that investors can shield their portfolios from inflation's negative effects. As inflation persists in 2025, real estate remains an essential investment tool for preserving and expanding wealth over time. Challenges of rising interest rates. While real estate remains an attractive investment, it's not without its challenges. The rising interest rates in 2025 are a key factor that could impact profitability. Higher interest rates mean higher mortgage costs for home buyers and investors alike. As borrowing costs increase, potential buyers may struggle to afford homes, which can put downward pressure on property prices in certain markets. For investors, this could lead to tighter profit margins, especially for those who rely on leverage to finance their real estate purchases. Moreover, the rising cost of mortgages may make it harder for new buyers to enter the market, which could slow down demand in some areas. In major cities, where property prices have already surged, affordability remains a major concern. Investors may need to adjust their strategy to focus on emerging markets, smaller cities, or properties in need of renovation that can increase in value through upgrades. High upfront capital requirements. Real estate is also known for its significant upfront costs. Unlike stocks or bonds where you can start investing with just a few dollars, buying property involves large sums of money. Down payments can be substantial, and closing costs, taxes, insurance, and ongoing maintenance expenses add up quickly. These high barriers to entry make real estate less accessible for some investors, particularly first-time buyers or those with limited capital. Additionally, for investors looking to purchase rental properties, ongoing maintenance can be costly. From repairing leaky roofs to replacing appliances, maintaining a property often requires regular investments of both time and money. While real estate can be a great long-term wealth-building tool, it is essential to assess whether you have the necessary resources to handle these upfront and ongoing costs. For some, the large capital requirements can be a deterrent, especially when compared to the relatively lower investment needed for stocks or other investment vehicles. Technology. Making real estate more accessible. Technology has opened new doors for real estate investors in 2025. Platforms like Fundrise and Roofstock are revolutionizing the industry by allowing individuals to invest in real estate without the burdens of direct ownership. Crowdfunding platforms let you pool your money with other investors to purchase residential or commercial properties, providing a way to gain exposure to real estate with lower capital requirements. These innovations make real estate investing more accessible to a wider audience, breaking down barriers that once limited it to the wealthy or institutional investors. Crowdfunding platforms also eliminate the need to manage properties directly, which can be time-consuming and complex. This democratization of real estate investment allows individuals to diversify their portfolios without the hassle of traditional real estate ownership. As technology continues to evolve, it's likely that more opportunities for accessible real estate investment will emerge. The importance of diversification. Diversification is key to a resilient investment portfolio in 2025. While real estate remains an important part of many portfolios, it should not be the only asset class in which you invest. Combining real estate with other assets, such as stocks, bonds, or alternative investments like REITs, real estate investment trusts, or peer-to-peer lending, can help create a more balanced and robust portfolio. In times of economic uncertainty, diversification can protect you from market fluctuations in any one area. Stocks and bonds offer liquidity, which real estate cannot provide, while real estate offers long-term stability and appreciation that stocks might not. By blending real estate with other types of investments, you can build a portfolio that is better prepared to withstand market volatility, hedge against inflation, and capture growth opportunities in multiple asset classes. Is real estate still the best investment? Real estate remains one of the most solid investment options in 2025, especially for those looking for stability, passive income, and a hedge against inflation. However, rising interest rates, high upfront costs, and the need for diversification mean that real estate isn't without its challenges. For investors, it's important to weigh these risks, assess their financial situation, and explore other investment opportunities to create a balanced, resilient portfolio. While real estate continues to be a strong asset for long-term wealth building, it's essential to stay informed about the changing market conditions and adjust your investment strategy accordingly. Whether you're new to real estate or a seasoned investor, staying up to date with trends and new opportunities in the market is key to making the most of your investment. Thank you guys for watching. If you want more videos like this, make sure to like the video and hit subscribe button, and we'll see you in the next video.